obligatory 30-point ramp and a couple bars. It's definitely on these shorter time frames starting to turn. And you can see how 15 minutes now turned up. 5 minute. 1 hour still down, but the rate of change is turning. A little bit extended here. Although it still looks like it's going to make a new high. Got a little picky waiting for a sell-off into this area. It never came. Sell-off. If you look at how that bottom, as long as it's higher lows, it's usually off to the races. Let's take a look at crude. Daily, it's still heavy. 4 hour we broke down, but how, like we talked about in the morning call, definitely oversold with the bounce. See if we can get that to flatten out. Got a little overdone now. It's definitely starting to try and turn on these shorter time frames. We'll have to watch that. Let's pull up that yen chart we were talking about. Here's the DAX. We could take a look at that too. I think it's one to watch with the Greek situation. Somewhat lagging our market. And yen. There's the yen. Running out of a little bit of steam. But like I was saying, daily, weekly, took out the '07 high. Last time it was here was in '01. So it's been a while. All right. I'll put those range away. Let's go look at the S&P. held the red band. It's still in that grinding top. I really would want to see it if you were going to get really bearish, that this would have to take out these recent February and January lows. So I don't think that's going to happen in this summer. I think it's going to be more of the chop same all summer. The majority of the spike up was based on, it's almost daily now, where someone complains in Greece, market sells off, and then someone comes in and saves the day. Let's look at the euro. You can see it pretty pronounced in the euro. Articles about Greece not making their payment this week, and then someone saying that they're going to make their payment. So it's a pretty good tell. On the rest of the market, as you can see. Click now, the market's going to take off. Let's see. Just grinding higher. I'll show a chart real quick. The question is, if Greece defaults, Germany takes a hit. If Germany has to bail out Greece and they take another hit, I would have to say that Germany has been the biggest beneficiary of this fiasco. Two things: they become the strongest in the Eurozone, and they get stronger because as the euro has come down, they get a boost from their exports. So when euro's at 160 a year ago, 150, now it's at 108. It's almost 50% off. So I know you're not seeing it at your local BMW dealership, but throughout the world, it's definitely making German products cheaper. So their industrial production is humming along, if not increasing their exports because of the cheaper prices. So it's pretty much, to me, a win for them. Greece isn't going to default. I believe the numbers, you're talking about they need $1 billion here, $1 billion there, and the ECB is buying billions and tens of billions a week in bonds. They just chose to not buy Greek bonds because of the quote unquote risk. So if the ECB was going to say, okay, you have to do your austerity, but we want you to, and then we'll put you back into the pool of being able to put your bonds to the ECB to buy with their quantitative easing, then their bond prices go to the moon. So I look at it, they're already bailing out Greece, technically. by debasing their currency. Hold on one second. Sorry about that. All right, I'm back. I wanted to do a small chart. Maybe I'll go like this. So, nope, I don't want to do that. So this is the NASDAQ futures. Let me make sure what the open was. I think it was 13. This is the opening bar, that down move and then the rally. And then this is the opening. See if I could expand this out. Nope. Anyway, this is just a one-day chart of the Ultra Shares. TQQQ is the symbol. So you can see at that opening price, it was at 113. We'll just go round it to 113 even. And now it's trading at 115.60. So 100 shares, $1.50, that's $150. And then let's look at what that opened, 80. So it's 30 points. On the NASDAQ futures, it's 200 for 10, so it's $300. So this is up 250. This is up 300. So you can see they pretty much it tracks. It's a derivative. It tracks exactly to the Nasdaq 100. So that's a particular stock that trades to that. And then you also have the oil. What's the oil services? Wait till it comes up. But it definitely tracks crude oil pretty darn close, similar, similar amounts, etc. So well, that chart's pretty slow. Here's the 1-day chart. Here's the 1300 open, so it spiked up and came back just like this. That low was 36 3/4. So it went up 60 cents. So on the equivalent, it's about 1,000 shares. It's $600. The crude went from 57.50, 58, so it went about $1.50 or so, about $1 and change. So it's pretty close to an equivalent in how they match. Although the oil services sometimes leads, you can see it's making a new low right now, so that's kind of bearish for oil. There's also the XRB. So they've, with all these ETFs nowadays, that's what they try to do is get them to all be equivalent. Drew's kind of getting beat up right now. Yeah, so just to wrap up with the Germany thing, the Germans, a lot of their, I believe it's like probably a third or maybe even more of their, like almost 40% of their industrial and exports and production go to Europe. And then the rest go, so there it's all in euros. It doesn't matter what the euro price is. Those, as long as those economies are alive, which that's what they're trying to do, keep Greece, Spain, Italy, Portugal alive to buy stuff off of them. At the same time, by having that lower euro price, it allows Spain, Italy, Portugal, even Germany to go out and sell more product because it's way cheaper, especially in the foodstuffs that's the southern Mediterranean countries produce. So it benefits them. It benefits Germany. Germany's holding all the money for and all the power. So within Europe, so it's kind of like, I don't know. It's kind of a win-win for them. kind of stuck at that top in the market. Looks like it wants to break out, but it's a pretty slow time of day. The oil inventory numbers are because of the holiday. Our kickback a day. So they come out tomorrow. Pretty much from here on out, they'll be showing a draw for the next at least month or month and a half through July. There's another push lower on crude. No news today. Tomorrow is crude inventories, pending home sales, and initial claims. So those are decent size movers for the numbers. I like to see the S&P catch up, which would really drive the Nasdaq probably at 45.20. So you can see from a relative strength, Nasdaq's trickling higher, S&P's going sideways, oil's going down. They're all the same time frames. So I like to keep them, close to each other. It's going sideways, this is dropping. So that's what's holding the S&P down. 15-20% of the S&P is energy. So if this were to bounce, then you would get a bounce here, and then the Nasdaq, since it's outperforming, will most likely go to, I didn't go that higher time frame. Probably back near yesterday's 20 and 25. Let's see, we'll zoom in on crude. Below the band on the 1 minute. Let's see if we can get a bounce back up to 58-ish. Get this to drive to new highs. These opens are tough lately. $86, drop 10, rally 10, rally 30. A lot of times that pattern I showed you where it's squeezing in on the Bollinger Bands and then move comes, a lot of times it goes one way and goes the other. It head fakes. There was the breakout. At this point, the S&P is just going up in sympathy with the NASDAQ, and crude isn't even moving. Put it back to 5 minute. Let's go and take a look at bonds. A bit stable, somewhat an uptrend of late. Each gray shaded area, by the way, is a day. In case you didn't see that on T4. You know, if you go to just a 1 hour, if I go to a shorter time frame, it'll take a while to load. So bonds have been pretty stable, so okay for stocks to rally, I guess. Back to where we were yesterday. This time we made a new high, and you can see just a tick range chart. It's not pinned at 100 this time. 95. Very slight divergence, bearish divergence, but upside's probably limited. To get that spread chart back on, but just pull it up here. This is a prime case of the much higher time frame kicking in. That's why I always see me looking at like the 4-hour chart. That's pretty much my anchor. It's going up. If you want to lean long. Crude is in a choppier mode. Although it is down now finally in a 4-hour, you can see how it's been flat or down since start of May. Just a chop. Another big push in the NASDAQ. definite short squeeze going on. So yeah, oil has bounced up. S&P's taken off now. New high, NASDAQ. And how that looks here. So in the last two up bars in crude, NASDAQ's run 8 points. Well, the total move was 8 points now, 12 or 10 total. Crude on the 15 minutes really flattening out. We'll see if crude is able to catch up to the S&P. We have to get to 58.26. I think it's possible. It's definitely still in that choppy range. All right, I'll go over the some people had asked about the way the bands work. So once again, I go at a certain time frame, a higher time frame. I usually use the, I think for our what we're doing, we'll go to the 1 hour. So if the gold band is the most important band, this is the midpoint. So in general, if this is downsloping, you'd prefer to be looking for shorts, especially near the higher part. I like to even look at if you break this into quarters. So if you put a midpoint here between the blue and the gold, that's the midpoint, and that's the one, the band. So if you drew an imaginary line that comes through here, anything above that would be a good area to short. You can also buy once it gets below the band. It's a riskier trade, but still you get a pretty decent rally, especially after a big move. You get the better. I find you go from one band to the next after a large down move. You know, meaning from a statistical standpoint, something that's a little bit. This one 28. This is over 20 points. 1% sell off and it bounces. So then on the sell side, I'd look for, you know, above this band now. But you'd like to see a down candle before you look to get the short, especially on the rebound short squeeze. You can see on the 15-minute, that same spot that you saw on the 1 hour. And here's how it looks on the 5-minute. Upsloping. You're looking to buy below the band. Never got there on the 15-minute. Now it's stuck in an area. I mean, it'll probably stay in this triangle area or even go to that 21.15. It changes back to the 15-minute. There's many different possible entries down here. I'll pull up the NASDAQ. The problem with the NASDAQ, it's so fast that by the time even a signal can trigger, it's rarely 20 points, and it's difficult to have a trade go off in that area. So different possible entry points. The way I look at it, you see a compression candle, comes back, so it opens here. We want to go into. People ask about candlesticks also all the time, so you got to think about it's a battle between buyers and sellers, bulls and bears. So when you see a candle, it opens here, sells off, rallies up, and closes there. So the open was here, closes there. It's a down candle, although it shows up white, but that's just how they do it with the black background. I prefer the black background because it really saves your eyes. You look at these bright, you know, even these, it's just too bright. So over the years, I've liked the black background. Bearish candle, bearish candle, bearish candle, meaning the sellers, the close was lower than the open. Close was lower than the open. Same thing going on here too. Now for me, if you get a candle that now opens here, rallies up here and closes here, pretty bullish candle. You're underneath the band. You can almost get long at the open of the next candle. If you wanted to even be, you could even say you get long above the top of that candle. So here. Same thing here. Once you get above a band, the candle gets bearish, you could sell. No reason to wait. No reason to hang on. Now, can it go higher? Of course, but I always like to say that the best trade is to get in late and out early. You never take heat. Those are the type of trades where you just never take any heat. So it's just a matter of letting the price action get you out, or you have your fixed stop. You know, the way we've had our stops. Although the volatility's picked up the last couple of days, you get stopped out. I think I got stopped out on crude 7 ticks from the low yesterday. On a long. Zoom back out. Crude seems to be holding, maybe even turn the corner. We'll have to see. You could see how sometimes the market, I think I look in this chart, where you get to a certain price level where at the high of the day it's spiked up and it's barely down ticking 2 points. So for me, that's a pretty bullish sign. You could even see it here where it's going sideways. It never really sold off. There was one big candle that came in to sell off and then came right back. Hung around here at that high, move. Hanging around at the high. Pretty extended though. Although got pinned at 100 again, so still no bearish divergence. So taking the spots, taking the 4 hour and the 1 hour, picking your spots, and then having an execution plan on a higher time frame. That's usually the best way to go. So as you could see, both bands are up. We tested that high, now we've got a lower high, so that's why I use both candlesticks and the bands, which allow me to have a much better feel of where this market's going. So this is a 15-minute chart, though. That's a little bit much, but it wouldn't shock me if this sold off. I'm not shorting it because I just don't, this price action. So if you think this is up, bullish, bullish, hanging in that zone for a while, still bullish. You could technically short it here with a stop at 21. It's just not my style. Some people only go one, long only or short only. I mean, a lot of the mutual funds, etc., are it's their charter, they're long only. So that's they can only buy. Then you also have, I would call, short-term traders and scalpers, that kind of stuff, that they're usually trying to be short. They'll fight the market. A lot of it's personality. A lot of it is kind of what your job is as a market maker. You always have to be in a position. So I know I brought that up in the past as a trading strategy. It's either you have to be in the market with best bid, best offer, which at some point you're going to get hit no matter how fast you are, or you have to actually be in position. So if someone buys, if the client buys and you're a broker dealer or market maker, you have to sell to them. So now you're short, they're long. It's just a matter of who's going to win on that one. And that's really the best way to put it for what market makers do. They're just always in a position, or they're always forced to take the other side of a trade. And then now they can hedge it. They can go and put that trade off to someone else. If they're bullish, a guy buys, they short, they can turn around and buy also. They'll probably take a quick loss, but if it's better than it going way, way up and then getting a bigger loss on that. A lot of times, though, they do actually use the hedging, either with options they can or derivatives. I don't think derivatives is much for market makers. It's just too fast and they can't get those off. So they'll use option strategies. They know there's a lot of buying pressure coming in. They can actually put on and they're going to have to be shorting. They can put on a buy option spread that will keep them basically net long. So as this buy pressure comes in from people buying, they're selling, but they're already long, so it cancels it out. They're basically just getting flat, getting flat, getting flat, getting flat. So those are different kind of trading strategies for what people do. Crude's trying to bottom. Let's look at the Nikkei. Basically, what I showed you with the yen, I'll pull my other yen chart up. Here's a daily chart of the yen. Here's a daily chart of the Nikkei. You can see that's in well, at least highest it's been in pretty much a decade. So you can see how the yen is driving it higher. That's their economic policy at this point, which actually seems to be working well. They're getting the market to go up, but it's not translating into economic benefit. But maybe next time. Let's see, market, if we can get it to sell off in here, might get another chance to buy. Got a decent rally in crude. Definitely seems to be turning the corner. Probably looks like one of those days where it'll just drift higher in this channel until you could draw almost a line 12, 13. It just gets down to 10:08. We'll look for a long trade there. Crude seems to be turning the corner. See if we can get that bouncing up a little more. The 5-minute systems seem to be more choppy. Get those kind of sideways movements, and then it moves sideways and then move. Pretty typical though on a day after a decent move with no news. Let's go to the close. 88. We'll close at 90 on the NASDAQ. We'd have to have a pretty big afternoon sell-off for that, but that's where the statistics are holding it to. So we'll see. All right, we'll see you in the wrap-up call. I will put stuff in the Skype room. It's Dave.mtg trading. When we get to levels, I'll put it in there for the manual traders on the Skype room. And we'll see you later. Thanks.